So, David, let's start with the Itafos amending its sulfuric acid contract with Rio Tinto, and why that came about and why that's important, especially in the current environment.
Yeah, Kevin, thank you. It's a great question. Obviously, on February 28th, the U.S. Began an altercation, we'll call it, with Iran. And corresponding to that, the Strait of Hormuz has been closed, and just a whole lot of traffic is locked behind that, and a whole lot of nitrogen production is locked behind that LNG. But also, more as important for us, obviously, is sulfur. About half this, I think 45% of global sulfur was in that Strait of Hormuz. And obviously, with the Russia-Ukraine war and a lot of drones hitting Russian refineries, Russia has quit exporting sulfur. So all of a sudden, two big sources of sulfur supply for the world and a growing demand for sulfur are shut out. And I tell you, when those bombs flew February 28th, I became immediately concerned. That was even before any of this really transpired, because I thought the next viable option is Vancouver. And, I don't really know how much surge capacity Vancouver has, but they have sulfur, and they do supply the world with sulfur. And my fear was that Vancouver would decouple from Tampa. And, as I saw this continue to develop, that was exactly what was happening. So I just knew if it continued up, that we just wouldn't be able to run. We could not pass on those costs. And about 40% of our offtake is low mag, it's superphosphoric acid. And those are annual contracts that start every June. And there was just no way I could raise my price high enough to offset that cost. So I was in fear of shutting down or cutting way back. And we're two sites. We have Conda, Idaho, Southeast Idaho, and we have an up and coming operation in Brazil called Arias. But Conda is our flagship. And when you have one plant, and that is who you are as much as anything, you've got to make sure you're able to run. And that's kind of been our secret sauce the last 5 years. We run at capacity, where a lot of the other competitors in the U.S. are not running at capacity for one reason or another. We've been able to run very high, and our margins have been good. And basically every nickel we've made in the last 5 years has gone back in to pay down our debt. We had a lot of debt starting in 21, and to build a new mine. That was a $100 million venture. And now we're building another $100 million project called mag reduction. It's a magnesium reduction project. So we're in the midst of that. And we have turnarounds every year. It's important to keep these plants maintained. We have a big turnaround every third year. So if you look at all the money, it looks like, oh my gosh, Itafos has done very well for 5. Yeah, we have, thank goodness, because we're able to stay in business, build this new mine, which takes our mine life to 2037. In addition, what we're doing right now is we're doing a lot more drilling, and we should have 2 new NI 43-101s, one at the end of 28, one at the end of 2031. And I think will show that there are resources there to extend our mine life well into the second half of the century. So we know how important that site is, not only to U.S. farmers, but to Canadian farmers, because some of that output ends up in Western Canada as MAP or as or a superphosphoric acid project. So we've been laser focused on continuing that operation. Obviously it was a result of the potash agri merger. We were able to attain Conda in 2018. So, that site's super important. So when this all started happening, I went to Rio and said, listen, I can't run at these kind of levels. And this is before it even ran to $1,000. And I said, but I can see where it's going. I don't know how long it's going to last, nor do you. We don't know the amount of damage in the Middle East from all the strikes at the other Middle East countries on sulfur production. So when the strait opens up and plants come back up online, it may be a year or two before they get back to having the same capability of about 18 million tons of sulfur as they did before. So there were just so many unknown things that we had to take action. And I will say Rio Tinto was super receptive. They have been a great partner for 35 years. And it took us about 3 or 4 weeks to kind of work through it and evolve to moving that index to Tampa. And there's some other things in it that I cannot disclose that will allow us to run in the second half of the year at capacity. So they were a great partner. They listened, and they need us too. I mean, we take 60% of our volume. It's about 610,000 tons from them. So for Rio to go out and place those tons immediately, you need more storage, more cars, all those things. So they kind of need us too. So it's important that neither side takes advantage of the other. And I think we both get that. And that's why it is a great partnership. And I give them a lot of credit for working with us on this issue. I think some companies may have said, too bad, and that would not have been a good outcome. So we're thrilled with it. And, this thing just came upon us so quickly. And I think people were a little surprised at the first quarter Tampa settlement. And then, the second quarter settlement went up because of the war. And we don't really know what's going to happen in the second half, but we're in a good position with this contract to be able to run, through December of this year. We feel pretty good about that. I mean, we get the affordability point of it, but it's like availability of P is just not there, and it's forcing the affordability equation to get even tighter. We get that. And I am concerned. I mean, I think if you look around the world, I think, we read that OCP is running at reduced rates, maybe as low as 60%. We read China had intended to export 4.5 million tons of MAP and DAP this year. Some of the analysts are saying it could be 1, it could be 0. And we hear South Africa's not running because they can't get sulfur. So you look at the Jordanians, the Egyptians, Tunisians, Senegal, all these countries have got to be on the floor from a sulfur standpoint. And I just don't know where they're going to get it, until this thing opens up and we understand the full extent of the damage in the Middle East. This is still a big unknown. Russia, I believe, is committed not to export any sulfur. I believe at least through the summer months. It wouldn't surprise me if that goes through year end. So the world is in a bit of a pickle here. And, I got to believe as you look at the next 12 months, it's probably a starter for a new ag cycle. I mean, we're already seeing December corn right at $5. I mean, it was 4.25 not long ago. We're seeing beans at 12. That was below 10 not long ago. So I think and this is U.S. centric, obviously, between Trump's big, beautiful bill and the help on insurance and premiums, ad hoc payments, maybe another one coming. It feels like that the farmer economics, although they may not feel very good today, are starting to improve. And we're hoping by 2027, we're in the midst of a new ag cycle, which farmers need. I mean, farmers need to be profitable. They have to be profitable. It's a tough business. And, I think that as a country, we've got to do a better job of finding downstream markets for those commodities, ensuring we're planting the right commodities in the right regions, and that they have a market for those commodities when they're harvested. For example, last year we planted so much corn because China wasn't buying beans and the rice market was not great. The cotton market wasn't great. So it just kind of forced farmers to an extreme to plant so much corn. And then we had a record yield with perfect weather. And thank God we did for farmers. They had bushels, but then the corn price collapsed. So then, if you look at all the P&L of a farmer's income statement, it's just tough. So I think Trump going to China last week, it seems like he's got another $17 billion committed in addition to the 25 million tons of beans per year the next 3 years. If they follow through with that, and if we think these yields are going to come off over the next 12 months because of a lack of fertility, whether it's yields or just hectares planted, then I think things are starting to appear to be better. And I think the best witness of that is how the futures markets are starting to react. They're starting to move up. So they kind of sense that too. But you've got, $17 gas in Europe. Russia's not exporting ammonia, so they got to find ammonia from somewhere else. Globally, ammonia is pretty tight. Maybe it is not as much in the Western Hemisphere, but it is around the world right now. India just came out tendered for over, I think, 500,000 tons of sulfur. I don't know where that's going to come from, or they could take any available sulfur in the world going to India, which leaves everybody else just completely short of sulfur and running at a lower P2O5 run rate. Of course, India's market's heavily subsidized. So, yeah, I mean, this is, I've been in this over 40 years, never seen anything like it. But we had to take action when you could see this thing developing. I called our chairman the day that happened. I said, this is super concerning for us. It should be super concerning for every sulfur consumer where this could go. And it happened. And I've been saying for years now that, you've got phosphate basically in 7 countries around the world. You've got China, Jordan, Morocco, Saudi Arabia, Egypt, Russia, and the USA are the primary suppliers. And I've always said, phosphates in countries that geopolitically you never know what's going to happen. And it happened. This is happening right here in real time in front of us. And there really is not a solution for it. So, the quicker the war can end, we get the strait back open and get some normalcy to it. But I think that could take through year end, basically, because I don't see it opening anytime soon. It feels like it's got a month or two to go before this is, I think, maybe some kind of compromise is made. And then, again, it takes a month or two to unplug it. And then what ship owner wants to go back in there? What's the insurance rate to go back in there? What's the capability back in there? If you look at all these plants, just think about all the parts that will need to be made or fabricated and ordered and then delivered and then, rebuilt. All these things are up in the air. Just nobody knows. So, if you look at the U.S., Kevin, in 1990, we had 18 phosphate companies. We only have 4 today. We had 22 sites. There are only 10 today. So the U.S. in Florida has basically been running for, 75 years. They're running out of rock. I mean, there is still rock there, but it's just less and less available. The quality is down. Mosaic's importing Peruvian rock to optimize their ability to make DAP and MAP and what they do. And White Springs, a nutrient facility, has publicly announced that they run out of rock in 2031, I think it is. So you're going to get less rock in Florida. In 1990, there was about 11 million tons of P2O5 production. Today, there's only about 6, and a little bit less than 6. So, we have ore in Idaho. That's the great thing about Idaho, where we are. There is phosphate there, and we're looking to continue to expand. But if you look at our market cap, it was 500 million US based a few weeks ago. It's down now because of all what's happening. But if we were to try to replicate or build everything that we have, it would be at least $2 to $3 billion. So it's a real conundrum that we're all in that, yeah, we'd like to do more and we'd love for affordability to improve and availability to improve, but we're just kind of stuck with a global crisis right now. And again, we took the steps necessary to allow us that we think to run, for the full year and supply our farmers. I'll tell you, right now, the U.S. is at a discount to the global market. Normally the U.S. imports 2 to 3 million tons of MAP and DAP, a little bit of triple too. And I just don't know where that's going to come from in the second half of the year because the plants are running around the world. And if their markets are better elsewhere, they're not going to come to the U.S. And that probably means, more exports from the U.S. to the world. If they can, and if farmers aren't buying and distribution's locked up and we're not going to pay these, I don't know what's going to happen, So this is a first for me. And I've seen a lot in the, 08 was an interesting time. 22 was an interesting time. The Eastern European collapse in the early 90s, kind of a transition. But the evolution of this business, I just don't know. It's very concerning. I'm hearing that the Brazilians, like 40% of their acres may not get any phosphate this year. They just may not apply. And Brazilian soils are not terrific. They're not great soils. I mean, they're not like the good old Central Illinois black soil. They're tough soils. But Brazilians are resilient. They do a great job. And I love Brazilian farmers. They're unbelievable. But I got to believe it's going to have an impact on, probably hectares planted this fall, their spring, and yields from that. So that was one question, Kevin. I'm sorry, that was a long answer.
Let's back up just a little bit. I don't think until this crisis occurred that people really understood the link between sulfur, sulfuric acid, and potash fertilizer production. So
Right.
sulfur is important just because of the sulfuric acid necessary for the production of phosphate fertilizer, correct?
That is correct. Yeah, you need sulfur. When you mix sulfur with rock, you need sulfur. It acidulates the rock and turns it into P2O5, and it goes through a process. So you got to have sulfur to make that reaction. And that's only true in phosphate. Potash does not have that issue. The potash guys are doing great up there in Saskatchewan, but sulfur is phosphate centric, correct?
So the shortages are both in sulfur and in phosphate fertilizer then, as well as the well-publicized nitrogen issues coming out of the Middle East?
Yeah, I saw a number the other day, and I'll it's probably 40 plants that are offline right now, and that's a guess. Okay, so it's not an accurate number, but I believe CF had published this in Argus or Crew about the number of plants that are shut down in the Strait. But in addition, all the plants that are shut down because they can't get LNG to run their plants, and they're in Pakistan and India. So it's had a big impact on nitrogen production too in the last 90 days. That's correct.
So it's interesting though that you believe that because of the shortage of fertilizers and because of that will lead to reduced acreage in some cases, lower yields in some cases, and therefore the agricultural commodities are likely to have to increase in price. So the pain right now is there for input costs, but you believe that that's going to translate into higher commodity prices for producers.
I mean, it certainly feels that way, Kevin. We had, I think, a decent global carryover of grain and oil seeds after this last crop last year. That this crop year ends in August. So if you look at, I don't know the exact numbers right in front of me, but it was at a higher level than we've seen in a few years. I think the stocks to use percentage was a little over 16%. It typically ranges from 16 to 19%. The lower the ratio, the tighter inventories are, the better the price. But I think globally, we'd kind of gotten used to living with 16%. And, and I think the big yield that we had last year probably contributed to lower prices. But again, as you go around the world, I read the other day that this could be the lowest rice production year we've seen in 11 years. I think we've had a drought in this country in the Southwest on wheat yields. Wheat production is going to be way down. I've been reading where Australia's wheat production acres are down, hectares are down because of a lack of nitrogen. So these stories are kind of starting to appear all over the world. And, I'm really concerned for Brazil, and their planting time, September, October, how much do they plant and how much fertilizer do they actually have for that crop? And I think they've been using like 45 million since it's been NPK. It's been growing every year, but this could be a year that number is less. So what happens there? And then you've got El Nino weather induced impact potentially this year, which could mean drier parts of the world. So it's starting to kind of stack up. And I think another point you need to think about is, I think people are going to increase their biofuel mandates. And I think it was Indonesia had indicated they may go to E50. And we're talking about E15 here year round. And I think you're going to see more of that. So countries aren't as dependent upon oil and oil products. I think countries are going to be thinking about, do I export as much of my grain and oil seeds as I historically have, or do I keep some of that as a safety stock and something like this ever happens again? So then do they become bigger importers of grains and oil seeds? So I just think the S&Ds and how people think about grains by country are going to change, which could end up creating more demand, traded demand for grains, more country at risk by keeping grains at home for safety stocks, more biofuels, and then you add on less fertilizer globally available. It's got to likely mean, lower yield. So it's a really combination of a lot of things that are going on and being talked about.
For Western Canadian farmers, it's typically, you buy and or order or pay for or commit to fertilizer summer, early fall, early winter, because that's the best price. Typically, the price rises as you get close to spring seeding. With all of this disruption and with prices high already, do you see any reset coming? What advice do you have for producers as far as timing their purchases and getting product in place for 2027?
Yeah, I mean, that's a great question, Kevin. And that's kind of spoke that a little bit earlier about, what are farmers and distribution dealers going to do this summer? Are they going to try to wait this out and see if the strait opens and then, do things loosen up and prices come off a little bit, sulfur? I think that's probably the likely attitude of most consumers of fertilizer here this summer. They're just going to continue to wait it out. And we've seen that already, frankly, around the world. If you think about the last 3 months, there's been very little trade of fertilizer, of nitrogen and phosphate in particular, because they're just trying to wait it out. And but it gets to a point you can't wait it out any longer. And I think you're going to, India has not, and that's why they tendered for over 1 million tons of DAP. They're taking advantage. I don't want to say take advantage, but they're taking the opportunity with not a lot of liquidity to get whatever available supply is out there, bought, and to ensure that they have enough for Kharif. But I do think as they go into their fall season, they're going to be struggling to find phosphate. And that's going to put a lot of pressure, I think, on global phosphate prices. So this thing could stay elevated for a while. And it's a hard call, and I don't know that it's going to crash. It's just about, I think farmers need to be thinking about not only affordability, and I get that point, but what's really going to be available between now and next spring. And everything may be just fine and it may work out perfectly, but we don't have that answer today, and I think we just got to continue to roll and see what transpires over the next 2 or 3 months, how much damage has been done in the Middle East, how much sulfur is truly available. The war in Ukraine, Russia, does that stop? Do those refineries start exporting sulfur? But I think by the time all that happens, I think globally, there won't be any sulfur. I mean, I think everybody outside of North America, let's say, that relies on the Middle East or Russia, I think they're probably getting to a point that they're running at half rates or not running at all, potentially. So again, we're trying to follow it, trying to understand it. But this is a real tough one, Kevin. It really is. And I feel for, we love farmers. We love them being profitable and having available fertilizer and maximizing yields and, having, making all that work. And that's why, again, we took this step a couple of months ago and could see it coming that if we didn't take action, we weren't going to be a good supplier to the farmers that need it. So
which is the biggest concern going into 2027? Is it sulfur or is it phosphate products?
Well, it's both. I mean, if you don't have sulfur, you don't have phosphate products. So I would say that, you think about this year, we were calling global trade of MAP and DAP 28 million tons. And historically, it's been closer to 30 to 31, but the last 3 or 4 years, affordability's probably impacted us even, last 2 or 3 years in particular, and that trade's been down to about 28. And there have been more NPs, SSPs sold in lieu of MAP and DAP, trying to get some P2O5. So, yeah, I would say that it's both. And I think if you don't have enough sulfur, you don't have enough phosphate. So And I would say global trade this year, does it go down to 23, 22, 20? I don't know. So you think about those nutrients need to be on the ground. They need to be in the soil supplying the crops. And so you take that much out, we've already lost 3 months, let's say. I don't, who knows what the final impact of that is. And as we said, but again, I'm guessing at these numbers because I just don't know. I mean, if China was 4 million tons of 28 and they don't export anything, you're down to 24 or 25 if they export one. And then, OCP's been running at reduced rates. Everybody's running at reduced rates. So I don't know that people have enough surge capacity to catch up, or will they have enough sulfur to allow them to catch up? So I think that's kind of the conundrum that we're in right now.
David, it's interesting times. Thank you very much for your time and your expertise. It's great visiting with you, and all the best to you and your company.
Well, Kevin, I love Saskatchewan, and as I said, I've been there, over 100 times, and love the people of that area. And I had a great career at Potash Corp, which is now Nutrients, a great company, and glad to see them doing so well too.